Hey guys, John. Hope you're having an awesome day today. This morning was pretty sweet. There was some huge moves in Tesla, some really big moves in all the indices. It was just really crazy. I think it was like 8 or 10x on a lot of the puts this morning, which is awesome. But there was one thing that came across the tickers this morning that I just couldn't believe. I thought it was absolutely insane. It was honestly one of the biggest orders I have ever seen in the dark pool, and what it was a $200 million or 200 million share transaction on ticker ETHE, which is an Ethereum trust. It's about $100. So you do 100 times about 200 million. It's a $200 billion trade on this Ethereum trust, which is insane. And especially considering that the crypto markets have been exploding recently, I thought, well, there's got to be something to this. So I look at the actual price of the trust, and right now it's about 110, 114 bucks. So it's like way above the entry point that whoever this was actually had. So you can tell based on the really big discrepancy. I mean, ETHE hasn't been at 110 for like 2 or 3 days. So it's really obvious that it was a humongous $200 billion buy in essentially an Ethereum derivative. Huge. And so I'm like, why would this happen? Why would this happen? I remember about 2 weeks ago, I was doing this trade on Bitcoin, and Bitcoin and Ethereum really highly correlated. So I'm going to use them a little bit interchangeably. But I was doing this trade, and what's been happening over the past, I would say, year or so is there's been this huge, like, kind of downward biased wedge in the crypto markets. And so I was trying to trade the breakout on Bitcoin out of this wedge. And I took the trade, I think it was about a 2,000% trade, and I ended up closing the trade a little bit early before it hit my target, which was about 4,000%. And the reason why is because I didn't think it was going to, like, actually make it through the whole breakout process. And that's exactly what happened. It went up a little bit. It went up a really good chunk, but then it came back down because it just wasn't ready to break that wedge. And what I thought was going to happen is it was going to have this big kind of tank down to the low, at least for Bitcoin, down to, like, 5,000, 6,000, 7,000, and then bounce back up again, and then break out over 10 grand, and then hopefully hit all-time highs again. And so that was kind of the thought process I had on it. And that was pretty much what I was sticking with until like a week ago, like the beginning of this week and last Saturday when it all started. Everything just exploded. I mean, it was huge, and it broke out of the same trend line after an extended period of consolidation. It just exploded out of it again. And that's when I was like, oh my God, I got to get long again. So I was like, bam, trying to buy as fast as I could. It just moved so quick. From at least for Bitcoin, from 9 to 10 to 11, and it's just been awesome, and it's been huge. And for those of you that have been following me for I think remember last year, there was the inverted yield curve. I moved a lot of my assets into long positions in the crypto market, and now more recently I've been getting into leveraged futures contracts with it. And what is crazy is the same thing with Ethereum, right? So Ethereum broke out of almost the exact same like downward wedge that it's been having for a pretty good chunk of time now. It just exploded out of it. So for me, like, instantly that was a buy signal. But then something really crazy happened. Because I've been long in crypto so long, it's just kind of based off of the overall U.S. markets having, first of all, there was an inverted yield curve, and the recession coming, and obviously the pandemic kind of hit after that all started. But I mean, it's just like there's obviously going to be a massive pull down, right? So gold and hard assets do extremely well when that happens, at least historically. So I've had a lot long in gold since about 1500, and now I think it's at 18, which is really good, especially in the futures contracts. That's a really big move when you trade on the initial margin at the margin leverage. So, like, I've been long hard assets for a long time, and I'll link that video below if you guys wanted to watch it. So what's cool is, like, now we have, like, some really solid confirmation, because people are always buying gold, right? So if you're long gold and you see someone buy like $1 billion of gold, like, that's cool, but it's not like as big as somebody buying $200 billion of cryptocurrency, because I have never ever seen a print over, like, I'd say maybe $5 billion in the cryptocurrency space for a specific for like Bitcoin or like one of the big three or any kind of derivative of the big three traded on the stock market. And today it happened, and it was so insanely, like, far away from where the price was that it's like someone is obviously seeing that there is a collapse and just a huge printing money from the Federal Reserve. And so they're making a play on it by making a ginormous $200 billion bet on the cryptocurrency markets, and specifically Ethereum, which has, you know, in really big bull runs, Ethereum usually outperforms Bitcoin in terms of percent changes. At least that's kind of what happened in the 2017 run-up, and I think that's probably what will happen again. You get a little bit better leverage in futures markets on Bitcoin, so that's why I've been trading Bitcoin a little bit more than Ethereum. But now I just saw this huge play come in, and it was obviously a straight equity play. It was not leveraged or anything, and it was right in the stock market, so you could actually see it. So just a huge play on, I think, is essentially a massive breakout. What I would do now, if I wasn't already in these markets, is basically, it's going to be hard to get in on a lot of leverage right now, just because it's already broken out a lot. So if you try to get in on leverage, you're going to probably find yourself getting liquidated, just because there's going to be a little bit of up and down volatility if you don't buy it right at the breakout point. But in terms of just like standard equity or standard calls, because I know you can get calls if you're in like some regions of the world, you're going to be seeing, I think, like from like this point of time until the election, just massive volatility in equities, which is going to translate to huge run-ups. Gold's already gone up a ton, but specifically I've got gold, but a lot of it really is in cryptocurrency markets, and specifically Ethereum here. With a $200 billion bet coming in, I think it is just a really high probability trade. You go long ETH right now, at least that's what I've been doing, is long ETH and other cryptos, and you just hold them. If you're getting it right now, what you could do, and what I'll probably do, is you just long it, and then you just set a really tight stop. Like if stuff reverses, if stuff starts crashing again, you can get out real quick. But essentially what you want to do is you want to use the price level that it's kind of been at over the last couple of days as a really big support level, because someone just bought like 200 billion at what I can only assume is, you know, what it was a couple of days ago, kind of Bitcoin at like 10.5, ETH around 300, a little bit less maybe. And I think that's really going to be a useful level when you look at long positions, because it's probably either going to go straight up and just not even touch this level again, which I think is the most likely scenario, or it'll go down and it'll hit the level again, and you know, you can stop out of it if that's what happens. But I think in terms of like what your best bets are going to be for a market where essentially you're looking at a really contentious election where it's obviously going to tank prices, and a market where, you know, a year ago there was an inverted yield curve, and since then you've been looking at the beginnings of a recession. I mean, yeah, there's been crazy stuff happening in equities, and it's been insane to see how much things have been pumping up. But in terms of raw currencies or crypto, I think really you're looking at a crash in, you know, traditional currencies, and just a really big pump opportunity that's already started in gold and crypto. So I'm long in everything. I can't obviously, like, it's not financial advice or anything, but I think these are going to be really some of the best markets to get into in terms of, like, as the recession starts, these are the markets that are going to do really well despite equities tanking. And so that's why I have a lot of exposure in it. That's why I kind of have been working towards getting more and more in it ever since about a year ago. And it's been doing really well more recently, which is why I've been upping the leverage on it. Again, make sure you're careful with it depending on the asset you actually trade. If you're just trading ETFs, you should basically be completely fine. You can just set stop losses. If you're trading leveraged futures, just be careful with the leverage multiple and make sure you work on getting a good short-term entry. And if you're trading calls and stuff, just make sure you get expirations past the election, maybe into January of next year. And I think that should really help you. So again, just a massive trade today on Ethereum, and I think it is an indicator of a much bigger move coming in the overall markets and also in crypto markets and other forex markets. So really cool stuff, guys. Thanks so much for watching. Hope you got a ton of value out of this and use it to make a ton of money. Go out there, apply it, and absolutely crush it. Bye.